Hello everyone, what is up? Hopefully you guys are having an amazing day again. We got extra news for today's video. Buys in the suite out ISO 222 2022 to 2025, and then Fed Now service 2023 to 2024. But if we go down the replies, we can see who knows, might come on sooner than most think. Digital is coming. We can see from XRP HODL, it will. They always lie. Smoke and mirrors again. It should happen sooner than later. Credible Crypto suite out the stages of XRP, a 3-tweet thread. We can see stage 1, XRP dumps while everything pumps. Common phrases heard during this stage are XRP in quotations is a scam, in quotations ripples dumping on you, haha, in quotations XRP the stablecoin, XRP's dead. Stage 2, XRP pumps while everything dumps. During this stage, XRP haters become XRP lovers. Confirmation of this stage occurs when we see a number of consecutive HTF green candles, as green candles are the ultimate determinant as to whether people hate or love a coin in this space. XRP Crypto Wolf suite out instant payment systems should become the new normal by the end of 2021. Look at the time, guys. Look at the timeline, guys. The European Union will introduce new rules within 4 years to make cross-border payments quicker and cheaper through the use of blockchain and crypto assets like stablecoins. Let's check this out. The European Commission is due to set out a strategy for encouraging greater use of digital finance at a time when 78% of payments in the Eurozone are in cash. It also wants a rapid shift to instant, right here guys, instant payments. Generally, as that lockdown showed the growing role of cashless payments again. Look at this cashless society. By 2024, the EU should put in place a comprehensive framework enabling the uptake of distributed ledger technology, DLT, and crypto assets in the financial sector. The document said it should also address the risk associated with these technologies. By 2024, it should be a lot quicker than this, guys. XRP Crypto Wolf suite out, Australia's central bank says there's no need for a central bank digital currency. The Reserve Bank of Australia's latest payments paper has taken a cautious and special line towards CBDC as well as private sector stablecoins. Let's check this out.
No need for central bank digital currency in Australia, says Reserve Bank. While other countries may be placing central bank digital currencies, also known as CBDCs, at the top of their agenda, Australia could buck the trend. According to a local news report on September 17, the Reserve Bank of Australia's latest payments paper has taken a cautious and skeptical line towards CBDCs as well as private sector stablecoins. The RBA does not believe there is currently a strong policy case for issuing a CBDC in Australia, pointing to the success of the country's efficient, real-time new payments platform. Moreover, while the use of cash for transactions is broadly declining, Australians are not relinquishing banknotes as quickly as other citizens, as for example, are the Swedes. Amid the COVID-19 pandemic, demand for cash actually saw a significant uptick, the paper stated. RBA has therefore pledged to continue to provide access to banknotes for as long as Australians wish to keep using them. The central bank's paper analysed the initiatives underway in Sweden, Canada and China, three of the most proactive countries in CBDC development. In Sweden's case, the RBA noted that the decline in cash use there has already been precipitous for several years, spurring the Riksbank to develop and test a potential e-krona. The Bank of Canada, meanwhile, has been readying itself for the potential issuance of a retail CBDC as and when it becomes desirable. Canada envisages two scenarios in which CBDC issuance could become advantageous: a collapse in cash use for everyday transactions, or threats to monetary policy from the circulation of a private sector digital currency. For its part, the RBA stressed the uncertain horizon for prospective currencies such as Facebook's Libra, noting that it remains to be seen whether the currency will gain regulatory approval and become operational. As for China, the RBA has speculated that the impetus behind the country's already advanced CBDC is tied to the domestic prevalence of private sector e-money wallet providers, such as Alipay and WeChat Pay. In the RBA's view, a CBDC could have significant downsides for the country, including higher funding costs for commercial banks. Currently, banks source roughly 60% of their funding from deposits, two-thirds of which comes from at-call deposits. Loss of deposit funding could push commercial banks to rely on funding from equity and capital markets to a greater extent. The paper noted. The loss of deposit funding and greater reliance on other funding sources could result in some increase in banks' cost of funds and result in a reduction in the size of their balance sheets and in the amount of financial intermediation. Moreover, a CBDC could increase the likelihood of a run on the banking system in case of financial stress. RBA claimed that in the presence of a CBDC, a run on the banking system as a whole would become feasible. If depositors have concerns about the entire financial system, they could seek to make large-scale transfers of commercial bank deposits into CBDC. This threat would be mitigated, however, by the existing protection offered by Australia's financial claims scheme for household deposits, the RBA admitted.
Once again from XRP Crypto Wolf, PayPal is working to bring crypto into the fold by making it possible for merchants to accept cryptocurrency. Let's check this out. It's at the forefront of all the e-commerce and digital payments. We also like that PayPal is working with merchants to bring crypto into the fold, and we think that's gonna be really important as cryptocurrencies become more mainstream in the years ahead. Over the past few months, PayPal has also been hiring blockchain engineers to develop its cryptocurrency capabilities. And we can see the active merchants accounts. It's growing steadily, guys. Once again from XRP Crypto Wolf, the Bank of England is considering a negative interest rate. Negative interest rates would let banks in the UK charge customers to hold cash. The initiative is supposed to encourage spending and improve the economy, so protect yourself with crypto instead. In brief, the Bank of England is considering a negative interest rate. This may mean that banks in the UK would charge customers to hold cash. The initiative is supposed to encourage spending and improve its economy. Would charge customers to hold cash. Imagine that, guys. We are entering this new era, as I said before, a cashless society. What do you guys think will happen at the end of the day? But either way, no one knows what will happen at the end of the day. But anyways, guys, hopefully you guys did enjoy today's video. If you guys did, please leave a like. Subscribe if you guys haven't already. Feel free to be a member of the channel. I'll see you guys in the next video. Hopefully you guys are having an amazing day. And you guys, see ya.
This is the beginning of the greatest economic cycle this country has had since World War II. And I knew the things that Donald would do, and he hasn't even got started. But this is the eye of the motherfucking storm, the perfect storm. It ain't never going to get any better. Never. This is perfect for the QLA model. If I could have written a prescription or a formula, I couldn't have written it any better. Low interest rates, money's free, you stupid. Massive chaos. And Donald's going to rip the mother economy apart. And he's going to for practice in a good way. This is it. It ain't never going to get anything better. This is like a multiple orgasm the rest of your life, you fucking slags that are in the audience. This is it.
Sometimes I don't want to hear what Dan has to tell me. But as I wrote in one of my blogs, the old man, he's always right. Because he's telling you what you don't want to hear about yourself, but what you know is true. And that is, you're not stepping yourself up. You're not stepping your game up. And you get caught up in fear. As Dan says, false expectations appearing real.